and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Friday, it's the 15th of October 2021, and my name is Jens. I'll guide you here through a webinar, which is a very interesting one, in fact, one which is probably a little more sophisticated, but still, I think it becomes quite clear quite soon why this is, in fact, a very important topic when it comes to trading in general. We want to look at an indicator today, which I really use. Well, it's the main indicator I use, to be honest, in my trading. It's an indicator which is very relevant when it comes to stock trading. It's the so-called VWAP, the volume weighted average price. And yeah, what this is and more details how to use it in your trading in the future will be here on topic of today's webinar. Before we start, let me just invite you here to subscribe to the YouTube channel from Admirals. If you watch the recording now, if you watch this live in the Zoom format here, feel free to please ask all your questions during the event if something's not clear. The same goes for those watching the recording now on YouTube. After subscribing and then having some comments or having some questions, please feel free to ask them right below the video. I'd be more than happy to answer them. Leave a thumb up here if you like what you just will see and what you will hopefully learn for your trading. And yeah, let us also know what you'd like to hear in the future so that we can produce videos which can let you profit in your trading then in the future. And let me now share my screen. There we go. So why stock traders use VWAP in their day trading. And this is what we will look at today. First of all, before we start, I'd like to tell you once again why Admirals is former Admiral Markets, what resulted, why the rebranding here is currently taking place. So Admirals is, as you might have known, not just an FX and CFD broker with over 8,000 financial instruments being offered, but also a broker which is considered to be a multi-asset broker. Multi-asset brokerage means that it's not just Forex and CFD focused, but also physical stocks can be traded, invest solutions are available, ETFs can be traded. And on top of that, there's also a development around the credit card being offered. You can see some very interesting developments here in the crypto space at the end of Admirals. And in addition to that, there's also a chance then to not just the credit card, but also to see Admirals getting green. I think this is a good way to put it. So with all the developments in the green environment currently taking place, ESG in this context is a very, very important topic. And let me just see. Okay. That being said, leaves Admiral as a true financial service provider, which goes far beyond just offering FX and CFD trading. So for further information, please check the website admiralmarkets.com, respectively admirals.com. And also when it comes to trading as a day trader, then this is something which is also of importance certainly to note. It's not just that here in Germany, for example, Admirals is considered to be the DAX expert with the probably most competitive offering when it comes to DAX CFD trading. But in addition to that, and since we are looking here at stock trading today, it's also noteworthy that you have 3 round turns every day free in terms of stock trading, stock CFD trading. So that means like you buy a stock for whatever reason that might be. 1 second, please. This is a slight Jens Joplin today. I hope it's fine. So you have an idea on trading whatever asset, or in this case stock, and the first 3 trades, so round turns, are free, so you don't need to pay commission. And even after that, you pay a very, very low commission of $2 per round turn, half turn. And so all in all, you should definitely give Admirals a deeper consideration when it comes to your trading if you're not already client from Admirals. So watching this video slash recording now, you can probably have seen plenty of webinars. I've already seen admirals here in other regions around the globe. There's now a new regulatory body coming into place. It's in Jordan. So also here, all regulatory bodies, entities here in this context can be found on the website for further information. And now let's go over here to the agenda from today, and let me just give you an overview. First of all, here on what we want to look at. So first of all, I'd like to show you what VWAP is in this case, volume weighted average price, and then also how it's calculated. I'd want to know, let you know that it's in fact a very simple calculation, but one which has a very effective component directly connected to this. And then I'll give you an example of VWAP in the real world. So in this case, I look with you at a chart I had on my screen, and I did a trade in AMD in this case. Very great trading stock, by the way. So if you look at the stock from an ATR to spreads and yeah, ATR to spread a relation, you find out AMD is probably right now, as of now, one of the most interesting trading stocks out there. In addition to that, you also probably have seen that AMD just saw a sharp bounce higher against 100, moving 10% within several weeks now. So it's also moving strongly in one or the other direction. It's not just long, certainly also on the downside. Right now, very hot. And here in this context, first bounce could be seen. And based on VWAP, we were capable of doing a trade here. And also what I want to show you is which question probably arises, which aggregation you should use when trading with VWAP in this case, and why this is the case. And we don't want to end the webinar then at this point, but what I'd like to give you is some further thoughts on how to use VWAP, in fact, to get a good understanding on where we stand in the market. And when I say where we stand in the market, I'm especially referring to the psychological side of trading in this case. So are market participants mainly underwater, for example, and are they forced to sell out their positions, for example, due to the price they paid for the stock on average? So this is also something we want to look at here and how to use this. So first of all, let's start with an introduction and give you here some thoughts on what is VWAP. So I already said it, VWAP is short for volume weighted average price. And to understand VWAP, first of all, you probably recall we once had a webinar here within this Trading Spotlight webinar series on moving averages. And here what we want to do now is we want to recall here the definition and calculation of these simple moving averages in this case. So what we want to do is, for example, we take 5 prices here, closing prices, then add them up, and then you divide them by the number of closing prices, in this case 5. So the mathematical formula behind this looks like this. So SMA is simple moving average, and then you have the closing prices, A1, A2, and so on and so forth. You sum them up, and then you divide it by N. So in this case, let's move further here. Oh, one sec. Do I have? Oh, this. Okay, I haven't it here, but let's probably go back here and 1 second. Let me just, even though this is very basic now, but still, I think it could make sense to give it such a look, to give it such a view. Just imagine that it's 19, the closing prices is 20, it's 21, it's 1850. I'm sorry. And then we have, I don't know, 22. So what we now do is we calculate these prices. So 19 plus 20 plus 21 plus 18.5 plus 22. So this is giving us 100.5. Okay, so let's do it probably that way. So, and we have a plus here. Another plus, oh, sorry, another plus, and another plus, and then equals 105. And then the next step, we take 100.5 and divide it by 5, and you get here 20.1. So The SMA 5 in this case of these 5 closing prices, simple moving averages here, is 20 point. I'm sorry, 20.1. So this is the simple moving average, and then probably the next closing price might reach 23. So what you then do is you take this one out here and add, instead of 19 here, you add 23 there. So you take out 19. Here's red. Okay, because you want to keep the SM5 here. So then you have dot 3. So then it becomes 04, and then you can see that the price obviously goes higher because we have now 104 divided by 5, and then we have dot 9. Okay, so that's the way how you calculate the simple moving average. Even though this is very, very basic now, you will see why this is probably important to recapitulate this, probably, because now what we want to do is we want to, this is very basic again, but what we want to do is we want to make this worthier, let's say, for our trading, so that we can really draw conclusions. You probably have heard in terms of simple moving averages that, for example, market participants look for the SMA 200, so the last 200 closing prices, for example, as a trend filter, and they use it as a long-term trend indicator in this case in their trading. But especially when it comes to short-term trading, this is probably not really giving us so much value, let's say. And so that's why we want to adapt here and make it better use this moving average for our case. And in this moment here, the VWAP comes into play. What VWAP does is it weighs the respective price with the volume trade at this price. For example, if the real turnover on a stock exchange at the respective level here, in this case, this is what we look at. And thus the price you have then is multiplied by the traded volume, and thus we say it's weighted by the volume. And the number obtained is then summed up and divided by the sum of the volume which is done. So mathematically, it looks like this. So we have VWAP, we have a number of shares bought in this case. So we especially look here at shares and the stock market. We have the number of shares bought, and then you multiply it with the share price, which is traded at this respective level, and then you divide it by the total number of shares which you bought. And now what I have here, this is a little unfortunate, to be honest. Let's do it that way then. So to give you an example on how this works, what we do is we take the closing prices here again at this aggregation we look at. So we will see that the aggregation we will use is an M1, in this case, a 1-minute chart, later stage. But here in this context, we want to work with closing prices and not put an aggregation here on top of that. So you have the closing prices. You have the closing price 50, 50.10, then 50.25, 49, 80, 49, 28. So obviously, if you just look at the closing prices is moving lower. And what you now have here is what I prepared is you have the closing prices, and then you have on the right you have the volume here, which is traded at this level. So you can put whatever zeros, how many zeros you want to put here, that the multiply with however zeros you want. So 100 shares, or if this is in 100 shares, and it's in this case it's 5,500 shares being traded at 50, or you have 1,000 shares, depends. But this doesn't really matter. What matters is what happens if we now not calculate the moving average price. So what you can see is if you look at the closing prices and do what we just did, and you sum up 50 and 50.1, and then 50.25, and then 49.8 and 49.25, you get 49.88. Let me just probably put this here. Okay. So this is what you get if you calculate the simple moving average 5 here of these 5 closing prices. And but we want to calculate the VWAP now. So what we do is that we have the sum of the closing prices, which we multiply with the volume in the right column here. And if you do this, you get a number which is 27,589. So multiplying here 50 with 55, 50.1 with 60, and so on and so forth. You add those up, the numbers, you get 27.589. And then what you do is you divide this sum by the sum of volume, which you then get by adding 55, 65, 16, 170, 250. And if you do this, what you can see is that the VWAP then comes up with a print here at 49.62. And now you might probably wonder how this is possible. Or, well, it's obvious how it's possible. Why the VWAP here in this case is significantly lower than the simple moving average we calculated here. So remember, we had here the simple moving average, which was 49.88. And here the VWAP is 49.62. So why is that? Well, the main reason for that is very simple. It has to do with the fact that more volume was done at a lower price. So which shows that there was heavier selling pressure once the market took on bearish momentum in this case. So that means that the average price which was traded, or which was seen by the market as a fair level of based on the current environment in which we find ourselves, is significantly lower. It could also be a sign that there's a next step you could take here. So probably you have seen, especially if a real sharp flush out happens in equities. But this is also true. It's not just in stocks. It's also true in indices. It's also true in commodities. It's also true in Bitcoin, wherever, that once volatility significantly picks up and there's a massive flush out and markets gets under pressure, then the volume spikes higher, which is usually a sign that more and more market participants are dumping their positions, getting stopped out. And these flush out scenarios sometimes point to potential so-called sentiment extremes or volume spikes. We can also use this since we are looking here at the volume. And these volume spikes usually point to at least short-term imbalances, which you can see then resulting in a sharp bounce, which could be of high interest once you scalp the market, for example. So, and that being said, now it's certainly very interesting, and you can see, okay, well, where can I find this? I'd recommend this since, and this is a very important to note. We are looking here at Admirals. We are looking at CFDs. So once we trade on the long and on the short sides, physical stocks, we want to take out here the invest solution. There's only possible to trade the long side. But we want to focus here on CFDs, and these are OTC traded products. So that means that you don't have access to real traded volume at the stock exchange, but it's an indicative price you see there. Still, I recommend using a charting platform, charting software besides your trading platform. So doing the research based on real volume, sorry. Based on real volume on an external platform, on a research platform, and then do your trading within the trading station, and in this case of Admirals. So trading then with Admirals as your broker. And so don't be surprised now. This is a so-called trading view chart. So I highly recommend using trading view in this context, because it's in fact it's a standard indicator. You can easily look up once you search the indicators tab. You just type in VWAP and you will see it's rightly displayed there. And so what we have here is the example I referred to at the beginning here. So it was AMD one. And by the way, I just have to see, do I have a date here? Okay, this is probably several months ago. So it's not an actual example. In fact, I don't have a timestamp here when this happened, but you could certainly look this up in the chart. So the thing was that AMD saw a sharp push higher, nearly a vertical move, up to 125, to new all-time highs above 100. And after that, there was a sharp drop in the price of the stock, and the market really started to accelerate on the downside. Let me just probably see one second. Let me just see. It's probably better to have a real chart here. Work with this. So So this is my trading view chart. This case, by the way, here. So indicators, and if you volume weighted. Oh, this is interesting, because you need just to type in VWAP. There we go. So just type in VWAP and then you will find it. So there's also some custom solutions, but in our case, the VWAP here, which is displayed in the chart, as you can see here. And here's, by the way, the multi-day VWAP. This is also something you should remember once we are heading forward here in the upcoming minutes. But let's look here at this market. So that was at the beginning of August. Okay, that was at the beginning of August, and there was this sharp rise higher. And you can also see here. So we talked about potential sentiment extremes or volume spikes in this case. So you see the highest volume being done that day, with over 200 million shares being traded, which is massive, considering the fact that in case of AMD, if I'm not mistaken, something around 40 to 45 million are traded on average as of now. And so this is nearly a five-fold volume here, which we saw that day, which is pointing to the market probably seeing a sentiment extreme, especially after this sharp run higher, which was mainly initiated after very solid earnings here on the 27th of July. But the thing is now, well, we see the market correcting and coming down, and there you can see that. It was, in fact, it was 3 days down after that sharp rise. In fact, it was the fourth day the market sold off. And what you can see from time to time when trading stocks is that you see kind of a 3-day down move after a very sharp run higher. And then on the third day down, you sometimes get lower, flushed out on the downside, and then the market bounces. And this is very interesting. I mean, that doesn't mean that we are then headed to new heights, but at least it's indicating that a short-term bottom might be near. And what we want to do then is we want to use VWAP in this case to see where this turning point might arise. And I really well remember that day, because I had this flush scenario on the downside, and I was very interested in 104 on the downside. I thought that 104 is a potential short-term support region given the ATR, so the average true range. And so I watched here the stock, and I remember I had a mistrade initially. So I traded AMD here in this spot. You can see these blue lines, and as you can see, by the way, so these blue lines, I changed them over time because I trade the stock more often than just once. But these blue lines are my my levels against which I plan to trade. And that day I had 107, and 106 here as first support levels on the downside, and below that 104. And here I said, well, after we flushed lower into the open, this is a 1-minute chart, and then we saw that 107 could be hold. There was a flash out again, and I planned here to enter the trade on the long side against 107, and then see if we can recapture VWAP. The thing, so this is this blue line which you can see here, this context, and you can see, well, we saw a sharp flush out on the downside, and then bounce back above 107. So a quick rebid, we call this, and then we made it back above the VWAP. That was a clear sign that now probably the bottom is in, and we are not getting this more aggressive flush on the downside, but probably see a sharper bounce up to 109, probably even 110. So I was in here already, but got stopped, obviously. I think it was a break even, should be a break even, because if I enter here against 107 and see the market bouncing really nearly 1 point up to 108, I'm risking something like max 50 cents. I'm ahead something like 2R, which means nothing more than that I'm trailing my stop to break even. That's that point. But this doesn't matter. What's more interesting is VWAP, to use VWAP here. Because the interesting thing about VWAP is that it's used, and that's why it's so important to realize it's real volume which is traded, and it's used from institutions. So let's assume I'm an execution-only trader at a trading desk. This institutional. It's not a prop firm. It's more like a big fund manager or something, big investment bank. And 1 second, by the way, I just have to look up one thing. Okay. So you probably have wondered which stock today is probably hot and worth a deeper look. Have a look at Space, Virgin Galactic. It's a very, very hot because they postponed the VMS Eve and VSS Unity. So, and that being said, the stock gaps massively lower, 15% right now, and it dropped 20. Currently trying to recapture 90, but we are trading in a region against which we could probably see a rollover here. And if we drop this again, then a flush down to 1850, probably 18 is possible. So this is what I'm just looking today after the webinar. But now let's come back and look at VWAP. So VWAP is used from institutions. So let's assume I'm an institution-only trader. And now you might wonder, what is a good trade? So what does it mean? Well, if I'm a trader and now my boss tells me, hey, we have 10 million Apple shares, for example, to buy, how would you find out whether you did a good trade or not? And what institutions usually do then is they rank their trades in relation to VWAP. So let's assume VWAP is, let's say, 100. If I buy now the 10 million shares below 100, and 100 is the volume weighted average price for the day, so that means it's the price which was on average paid from market participants on that given day, and I buy the stock at 99, then obviously I'm making a good trade for the day, because I'm buying 1 point better than the market participants on average did. And based on that, my bonus is calculated. If I buy, let's say, at 101, well, then I bought more expensive than the market. Volume weighted average price is 100, remember? So 1 point worse, and I'm not eligible for a bonus then in this case. So that sounds very easy, but it's in fact very, very common that big institutions look at VWAP in this case. And so it's also quite common that VWAP, once it's hold, for example, if you can't really recapture it over the day, for example, or drop below again, this is the price, again, the market paid on average for the stock. My bonus is calculated based on that. Let's assume I get the order buy 10 million Apple that day from my boss. And then I say, well, let's wait a little, let's see. And now the market is start to trend higher. So the stock might be hot for whatever reason. So it might be an earnings release, which is given out exactly that day, or probably it's some days earlier. Then the analysts got informed that this is probably a bigger release, probably the reason for a sharper move higher in the stock, whatever that might be. And that being said, the stock is now on our watch list as a trading desk, and then the stock comes in and trends above and holds above VWAP. And I want to see it drop below, because again, if I buy better than VWAP, well, I get a bonus. If not, I'm not eligible for a bonus. So now the market continues to trade. The clock is running in this case for me, and I have the order to buy 10 million shares, and probably exactly today. So now I'm sitting there just thinking, that's bad, because the order is buy 10 million Apple. Unfortunately, I don't have any as of now, and we're trading above VWAP. So, and then the time comes, I just have to buy, because the order is 10 million, and my boss, respectively the client, doesn't really care whether I get a bonus or not. He wants to get 10 million Apple. So I, in this case, then start to buy, and that means that once we hold significantly above or below, depends on which direction you look at it, from which perspective you look at it, then we start to trend above VWAP, and we see a true drive above VWAP, sometimes very, very strong trending days. So that being said, gives you already an idea on why VWAP is of importance, because VWAP obviously is a level against which we can say, okay, this is what the market sees, this is what big institutionals look at, and in this case, I can draw some conclusions from psychological perspective, what current market participants currently think about the market and what they could be forced to do. So that being said, now, brings us to a very important aspect. So I look at VWAP in this case and I see we drop VWAP and then we reclaim it. That's a strong sign because now the market is extremely under pressure for the last days. And once it holds VWAP here and we do not drop below that level, that might be the turning point, at least short term, for many traders now saying, I wanna buy against VWAP, especially now I'm forced to buy, in this case, AMD, the stock, after the recent dropout and the overall positive fundamental outlook, let's say, and the very, very favorable technical outlook after the breakout above 100. So that's the reason why I want to buy here above VWAP. Respectively, I expect VWAP to hold. If it drops again, well, then probably it's not yet the time to expect the market to turn around. And this is exactly what we got to see. So we drop VWAP again and we hold below VWAP. So now market participants are on the other side of the trade, probably have AMD in their portfolio and get the order to sell AMD stock in this case, and they have to, whatever reason that might be, but probably short-term solution, short-term reason. But if we drop below that level and can reclaim it, well, now VWAP is kind of a dynamic resistance line for at least a short period of time. And then we start to see selling. And the wider the distance between VWAP here and the stock price gets, the more unattractive it gets for market participants to sell, because again, they are not eligible for a bonus if they do not, or if in this case, they sell significantly below the volume weighted average price. So the price the market paid for the stock, in this case, respectively, the market sold the stock for. So that then naturally results in the market to see at least a sharper bounce given the overall diminishing supply in this case on the downside. And once we then headed to 104, which was also you can see here the trend line on the downside. So these two yellow lines, you could draw a very nice channel technical wise in this push lower from the vertical move to new all-time highs. And then I was like, okay, 104, this is probably a nice region to look for here. And as you can see, it was the bottom of the day, and not just that, we bounced really sharp against that level, and you were capable of seeing really buyers stepping in around 104. So we're respectively bits stepping up in this case. Once you watch the tape, this is another form of entering a trade, very, very low time frame in this case. And then you see the bounce towards VWAP. It's not just the bounce to VWAP. So this is the first level you look for. You want to see retest, because now you see, okay, market participants are selling out the stock. I don't really think that this is a good idea, especially longer term. I think AMD is a quite solid stock, but whatever that might be the reason. And then I see, what I expect usually is that these bigger institutional players start to sell here against VWAP, which should usually result in a sharper bounce. If it then pushes us to new lows, well, that needs to be seen. But we can see here that there's no really selling happening against VWAP. But what we see is, in fact, we reclaim VWAP. And not just that, but we then push to 107. Okay, that was a level already before. So this is our R1, and I'm sorry, S1 in this case. But then we are rolling over. I mean, at least we saw a $3 bounce here. Within, that was something like an hour. So this is German time, 5 p.m. German time, 6 p.m. German time, and not even that, 45 minutes. And then we see a bounce to VWAP. And again, I saw here against 100 and that was 100, 106.25, 26. It was very interesting. Because what you usually expect is that round numbers see increased interest, buying or selling interest. So you don't expect a big bid to appear here at 106.26 in this case. So I really well remember that tape, the print there. There was a big bid here. So more than 10 million shares someone wanted to buy here. And the interesting thing now was that this was a potential support. So I could say, well, I know when I'm wrong, because this is the region around VWAP. There's a potential buyer at 106.26. So what I could do is have a stop at something like, let's say 106.20, 106.19 probably, and give it a try here. Let's see if we continue to bounce, which we obviously did against VWAP then, because it's not just 106.20 or 26 then in this case when this big buyer drops, but also that we should see see we drop VWAP here again, and we drop below VWAP again, and we want to buy above, and we want to not necessarily buy below. Well, we want to buy if we are very extended, let's say. So, and that being said, it took a minute. It was like a pure explosion on the upside back above 100, and then you see another push to another orange line. In this case, this is what I want to introduce now. This is a 2-day VWAP, something we refer to as anchored in this case. But as you can see here, and based on, if you understand what VWAP is showing you, you can draw a very nice conclusion on where is the market currently trading. So I wouldn't just look at a chart and say, where's VWAP and that's it, but certainly the overall market environment makes sense to give it a look after the sharp rise higher in the stock, and what triggered the move higher, and where's technical relevant levels, and how many days are we down, and all that. That's certainly something which is of interest here. But still, if all this is clear, and you have a game plan, you know what you want to see, and you know what you want to play, VWAP can be a very nice tool here to see where the market is currently trading. And again, here I also remember that against 108 took off most of the position. And the reason for that is because we then really spiked into 2-day VWAP. And as you can see here, it wasn't just tested once coincidentally, but here you can see that shortly after we saw another test of this region, and we did make it above that level. So, and why this is a part of the next slide. Before we start, let me just see. Yes. Here, Jason. So the multi-day VWAP, exactly. Looks like a nice resistance. Could you please explain how does that differ from regular VWAP? Yes, this is exactly what we want to do now. Before we start, so first of all, it's which aggregation for VWAP here. So in principle, what we can say is that that VWAP can be really calculated over any time frame. So if I look at multi-day VWAP, we will look at the 2-day VWAP here. Some probably go here for the last significant move higher. So for example, year-to-date moving average, volume average price, or you have a big news release, for example, something we refer to as anchored VWAP. But again, this is a later stage. But only, in fact, in intraday trading, especially, the standard VWAP for the entire trading day is really relevant. So the question why is answered quickly. It's, as I pointed already out, used by the majority of equity traders who measure their performance in relation to VWAP. And you probably might laugh about this, but this is no rocket science sometimes. So trading is a very, very easy sport, in fact. Easy sport in terms of getting it intellectually. It's not, the craft itself is very difficult, but intellectually it's very simple. You buy low, you sell high, and then you ask the simple question, what is a good trade, what isn't? And well, it's usually measured in relation to other market participants. And this is usually what, for example, big investment banks do. And they measure it, for example, by VWAP. It's not solely only VWAP, but most of the time. And but what is more interesting, and this is where the question comes into play, I want to give you some further thoughts on VWAP. So VWAP can also be observed over several days, as you have seen, multi-day, 2-day VWAP here, based on the so-called well-known cognitive dissonance called anchor effect. So you have probably heard about trading being a psychological game, mainly a game of psychology. And you've probably also, you recall several webinars we did in the past year on cognitive dissonances, on cognitive biases, loss aversion, and all that. And there's other cognitive dissonances here, like, for example, the anchor effect. And the anchor effect is something you also know based on your personal trading. Just remember and be honest, or be honest to yourself. That's something which is always a good good way to look at this. How many times have you found yourself in a trade which didn't move in your direction? And how many times did you tell yourself, if we just trade back to break even again, where I entered the trade, I take it out. You don't have a stop. Let's assume this, okay? You enter the trade, you don't have a stop. The market trades against you. And then you say, well, it doesn't look that good, not that promising anymore. Hopefully the market turns back to the price where I entered, and I'd go out and don't touch it again. How many times has that happened to you? Well, to me, it happened. Yeah, well, it does not happen that often anymore, but it happened quite often in the past. Let's put it that way. And it's a natural tendency. And it's based on the cognitive dissonance, so-called anchored effect. And the thing is, the same is true once we see the market breaking a certain level. for example, let's say the market moves above former highs, and then you see that former resistance becomes new support. And it's given, or it's resulting out of the fact market participants look at the chart and say, well, great, if we just come back to the breakout region, I buy this, because this is obviously a good buy after the breakout. And the same is true with breakdowns. Once a support is broken, so new former support gets new resistance, for example, most of the time, based on the fact that market participants say, well, I wanted to get long against support, market broke support, no stop. Hopefully it turns back to break even so that I can get out. And then the supply overcomes the demand here, and the market pushes lower against former support, now resistance level again, retesting the lows, for example. And all this comes down to the anchor effect in this case. And what we want to do now is, when we look at volume weighted average price, the volume weighted average price again gives us an idea on what price the market paid on average here for trade XYZ. And what we do is we want to now look on, for example, on how far, or no, what we try to achieve here is we want to use VWAP to get an estimate of how far the market has moved from a certain price level based on a fundamental catalyst, whatever that fundamental catalyst might be. Most of the time it's an earnings release. Sometimes it's so-called power candle. Right now, for example, the first idea which comes to my mind is a CCJ. It's Cameco. It's the biggest uranium producer in the world, and it saw a massive run on Tuesday, I think. Yeah. So the stock came on my radar Tuesday in the evening. I didn't watch it all day long. It was just like, okay, which markets moved here or which stocks moved, and then I just saw that there was a massive increase in volume, a massive power candle. And that being said, it stands out. It just stands out, the candle. And that being said, brings me then to the idea to say, well, I want to buy if we retest the breakout region, which can be found around 23. Only problem with this is now that the market, as of now, has not seen any sharp pull-in against that level, but instead is continuing to rise further on the upside, probably because institutions are now getting interested in the stock. Energy crisis, you see, and now uranium probably becoming a topic again. Politicians like Emmanuel Macron in France sees an election next year. Well, probably it's a good idea to have a backup solution for this green revolution, because I think people are not that likely to vote for him if they have to sit freezing in front of their Christmas tree. Most likely they will probably say, well, I don't like this, and this guy is responsible for that. But whatever the reason might be, so CCJ, or the uranium sector in general, is very interesting. The only problem with this is now that the market hasn't yet pulled back. And so what I now try to do is I try to see if we get to see a retest of this anchored VWAP then in this case. So I use here the day, Tuesday, and then I have 1 day, 2 day, 3 day VWAP, and I continue to roll this until I see a potential retest, and then using the price. I have another example here. It's on Roku. And this is an example of the year-to-date anchored VWAP. By the way, if you want to follow a great guy on this topic, follow Brian Shannon. Anchored VWAP it's a principle he uses very, very often, and I think his name is Trendspider. I don't know. It's Brian Shannon. So Brian Shannon on Twitter. He's a great guy on this topic. Definitely. And so what I want to show you here is now the anchored VWAP based on the year-to-date price. And once I took this chart, it was the multi-day VWAP for 172. It was a screenshot, so we have to roll it further. So I took the screenshot several weeks ago, but the concept stays the same. So what I do is I take every trading day till that day, and then I have an average price the market paid over the year so far for the stock, in this case a growth stock, Roku. And as you can see, it's not that it's like we point on it and then we just turn around, but we respect this level here, as you can see. But also once we drop, for example, we can see that after a sharper drop that was mainly caused by the yields going higher in end of February, March, we saw retest and then rolling over against that level again. And just assume now the following, just try to think like market participants do. So Roku is a very interesting growth stock. has seen a massive run higher over the course of 2020, especially in the second part. And was also mentioned several times, for example, from ARK Innovation ETF, from Katie Wood, and so on and so forth. So it's definitely the stock which is of interest for market participants. And now assume you wonder how to buy it or where to buy it, or you came across Roku in let's say January, for example, and just wonder what's currently a fair price, or at which price can I get in here, and what market participants paid so far this year for the stock. And as you can see here, that was a nice buy in quotation marks around 400. Market pushed up to 500, around 500, then rolling over. And now assume the following. Now assume that you probably entered the stock too late, and you see the market dropping here, hoping that it will somehow turn around, but it doesn't turn around. Market keeps on falling, keeps on falling, keeps on falling. And what will you say now? Well, if we at least trade back to break even, or to the price the market on average paid for the stock. And just remember, so now you might say, why should market participants, I mean, the price market participants entered here, does it really matter? The individual, not necessarily, but if you look at the broad market, then it certainly matters, because the volume here is giving you an idea on how many stocks were bought, sold on a certain level. So based on that, it definitely makes sense to then look at the price. Expect selling pressure, respectively, more demand coming in once we test it from higher, respectively, once we find, or if we find resistance, then in a bounce in this case. And as you can see here, so we really tested it and then rolled over again. And then we saw another test, rolled over again, made it back. Then we saw also here, that was also from a short-term perspective, that was in August around, at least short-term, you saw a very sharp move lower. That's also driven probably here due to earnings, which were released that day. You test the region. If you know that the year-to-date VWAP is around this region here, around 380, 390 or something, well, also from an intraday perspective, that's getting interesting. That's not just for longer term engagements, but it's also interesting for short-term engagements. You just don't want to be aggressively short and betting on further movement on the downside. If we trade here and retest the year-to-date VWAP in an interesting growth stock like Roku is. So, and here you can see that even though you need to think a little, so it's not self-explaining, but it gives you a very good idea on where we stand in the market, what the current market psychological bias is, and use this in your trading, hopefully, in the future to make better trading decisions. So let's sum this up. First of all, volume weighted average price, VWAP, is VWAP is short for volume weighted average price, and let's put it that way. So it weights the respective price with the volume traded at this price. So here in this case, the real turnover on the stock exchange at the respective price level. So given the fact that here we at Admirals trade CFDs, long and short, great opportunity here to profit from long trades, but also from short trades. But that being said, it's an OTC product. We don't have real volume. We need an external source. We can find this external source, for example, a TradingView. I'm not really sure how much it is, but I think something like $10 you need to pay for the pro solution, because only then you get access to the real stock market data. But however, try to get your hands on this, and this is, I think, very cheap. It's something like $2 per month or so. It's definitely worth a deeper look, probably an investment from your end, to just get a better idea on where the market is trading based on real volume being done, and then use this knowledge and trade it via the CFD. Very nice, scalable, also from a risk perspective, than at Admirals. And again, why is VWAP of interest for us? Because VWAP is used by the majority of equity traders who measure their performance in relation to VWAP. So I don't want to trade or buy significantly above VWAP, because then I'm buying expensive, more expensive than the market has paid, and probably I'm not eligible for a bonus, vice versa. And also, again, VWAP can be observed over several days based on the well-known so-called cognitive dissonance we know as anchor effect. And that's it on the VWAP. I have another very, very interesting topic next Wednesday for you. I prepared something on Bitcoin, an introduction on Bitcoin. And we want to, first of all, start with an overview of cryptocurrencies and Bitcoin. The time is different. We will here start next week on 7 p.m. London time, the 20th of October. We'll look into what is a cryptocurrency, what is Bitcoin especially, what is the blockchain technology, how to understand that, characteristics of Bitcoin. And then 2 weeks after that event, I'm not sure, is it 2 weeks? I think so. We will then dig deeper into how to trade Bitcoin. But first of all, we need to make sure that we have a solid fundament to build our knowledge on. And so if you want to register for the webinar, head over to admiralmarkets.com, there to the webinars or educations tab, the webinars, and there you can register for this webinar. It's also free. Feel free to register. It's not within the series here, Trading Spotlight, so it's a separate webinar. It's a hot topic webinar. So you really need to register. If you need help, questions around Admirals as a broker, feel free to reach out here to Admirals in this context. Also, just as I already mentioned at the beginning, leave a thumb up if you enjoyed the webinar, subscribe to the YouTube channel if you watch the recording on YouTube, set a reminder so that you don't miss any of the webinars which we produce for you. Fully regulated broker, I already said it at the beginning. Here's the risk disclaimer. Please read it carefully. Be aware of the risks involved trading the markets. And now it's time to wish you a happy weekend. Enjoy yourself. Talk to you again next week on Wednesday. I really look forward to it. All the best. Happy trading. Bye-bye.